Welcome to TradeTheNBI.com. This is John Sports for the 15th of July. And we're halfway through the month now, and you can see that we've gone literally nowhere. But we've seen certainly a deterioration in some of the economic readings, so it's interesting that we're maintaining where we are. You can see here we're pretty close to reaching magenta over yellow and right at the 23%. And that becomes just significant from a standpoint of trade above, so 37.86 of that definitely was long biased. We've got all the proper signals except for the midterm or long-term buyers. The short-term buyers still rising. We have orange DOC here declining. Those usually have a bullish tint. We're already still in that shakeout gold rising, but it's been a negative shakeout. So this is that push-pull drag that's sort of keeping us flat, and hasn't changed yet. We're looking for that spark that's going to ignite something, but I think there's just too much uncertainty and too many camps that are literally juxtaposed to each other, because short-term is highly negative, but they're looking at the bright side of 6 months from now. The Fed is going to have to stop tightening because they'll have gone too far and created a recession, which will cause quantitative easing and new easy money. So some are thinking, well, I might as well get ready for that now, and others are like, but it could get a lot worse. And so that's it. There's still a lot of money that comes in that has to be put to work. So where do you go? It's going to be the NASDAQ looking a little bit better, because you can see red DOC already turning up. Extremes in the green range, it should give it a lift, and it's above the 23, so performing at least from a technical standpoint better than the S&P. So it was the leader before, and then it also led a little bit of the decline. This is where you get the problems. The unknown of the Eurozone really does weigh on what happens with the NASDAQ, and it certainly has an impact on earnings, because a lot of S&P 500 earnings come from the Eurozone. Of course, every time it actually did trade well below parity right there at 0.99, but buy it up pretty darn good just to keep it right around that range, which makes everybody a loser, because banks are going to charge their transaction on either side. So if you're either side of the euro, you're actually losing, because they're going to charge 3 pennies or so for their float above and below. So either way, trading the money back and forth, there are no risks, because you're going to end up with less than a euro if you're trading it for $1, and less than a euro if you're trading for, $1 if you're trading for a euro. So it gets you both ways. But certainly makes it important for everyone who wants to travel to Europe, because that's a lot cheaper than it's been. And another bizarre one, gold continuing to decline. I mean, the readings are clear that we're still in the negative roll with it, but quite amazing when you look at the inflationary numbers that we're seeing, and to have gold dipping in tandem with euro, not even dipping with the market. Certainly an interesting one to see. Of course, that would indicate some kind of massive deflation, which is a narrative that some people are trying to sell, but really unlikely unless we see oil plummet to $40-50 a barrel. Then that certainly could that'll again spark a whole new wave of economic renewal, because at these levels we're still sucking a lot of money out of people's available reserves. And when the consumer is the majority of the economic growth, there you have it. Treasury still yield falling, and some people are thinking that they've seen peak rates, which is impossible when the Fed has already said that they plan to increase on a 3/4 basis and so on. So some of this is sort of a counter to actually what's taking place in the real world, which is a little interesting. From a Bitcoin standpoint, getting back over that 20K number, which has been pretty good. It hasn't broken down when it's gotten below that key threshold. There still seem to be finding new resources to want to get in there. I still don't think it's trading as effective as ETH is, and you can see that it's much cleaner and certainly behaving comparable, but probably just from a technical standpoint, as far as our readings go, slightly better. And from the 50K standpoint, so the decline, all we've done is pretty much come back to fill back up to where the breakdown started. And it came back up. From an intraday standpoint, you can see started off ugly within the European session, but didn't take long, caught a bid, and popped right back up, and created a whole new series of positive extremes in the process. Getting right there, that filled back in. It's pretty clean. And then the rest of the day was just long, and then hit a couple little short signals, but everything that signaled just did not produce any breakdowns. It wasn't hard to get in and out of them, but the new cycles pretty mediocre in between there. The final one that came through here with the MBI produced a little uptick before we started to fill back, because that one was all on positive extremes going through there, and those filled back pretty clean in this pre-market area. And even from, actually we should just mark that while we're here. Here was the beginning of that other set, which took place right there. So right around that 75 range would be the expectation, and still above it. So that's the long and the short of it. This summer heat is certainly affecting some minds in the market, but readings are playing out exactly like we expect to see from them, so we'll take that and continue to trade it. Look for me on the Skype chat. We'll talk to you later. Have a great weekend.